Welcome to another video. Today we will be speaking about how we're supposed to be performing an analysis on a pair. So in general, how you're supposed to be approaching the market. So I will be taking a pair, analyzing it from a technical perspective, then COT perspective, so order flow, to understand what hedge funds and big institutions are doing on that specific pair. And by the end of the video, I will show you exactly which zone we have to be looking for a potential trading opportunity. So the video will be both educational and practical, because you will see exactly which trading opportunity you can be looking at. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, today I want to make a full breakdown on AUD USD, and the reason for which I want to make this full breakdown is because this pair is very educational to be looked at the moment. So first I want to show you what we have from a technical perspective, then COT perspective, and I also want to show you exactly how we can be looking for a potential trading opportunity on it. But during the analysis I will keep it very educational because I will be showing some very key concepts, so make sure that you watch the video until the end. So let's start here from what we have on the monthly time frame. Now on the monthly time frame here, there is already an important concept that we have to speak about. The market created a low, then created a lower low, and immediately after that the market created an equal high. Now if you see a market that creates an impulse, a retracement, another impulse, so a lower low, and then the next leg goes back up and creates an equal high, what do you expect? You expect the market to create a wave to the downside and only then start the move back up after it has created this inverted head and shoulders. Only then you can expect the next move to the upside. So you definitely want to see here this inverted head and shoulders play out to the upside. Now what does this mean? As we said, we want to see a wave to the downside, right? To create the right shoulder. That is exactly what you want to see when the market reaches the previous high. So immediately from the monthly we have our downside target at this level. Okay, as we said, for the creation of this leg here to the downside. We go down on the weekly, and what kind of situation can we see on the weekly time frame? Now on the weekly we can see that the market from this low, after this red candle, it has created this impulse to the upside, and after the impulse it already started a retracement. Now every time that you have an impulse in the market, where are you supposed to be taking the Fibonacci if you want to measure the retracement from that impulse? You have to take your Fibonacci on the impulse itself. So in this case, from the low to this high. And what we can see that the 0.382 has already stopped the market during the retracement, and the market is obviously pushing away from the level. And what we can also notice is that our downside target is lining up perfectly with the 50% retracement, which when you see something like this means that we have good probabilities of the market actually retracing to this level. And we also notice that we have the 0.618, obviously the golden ratio, the Fibonacci level that the market hits most of the times before starting the next impulse to the upside. That is pretty near to the structure that we have here as well, this previous support here, now to resistance. So we can, from the weekly time frame, adjust our target in a more accurate way by placing it in between the 50% and 0.618, which are the Fibonacci levels that at the moment are lining up the best with structure. So immediately from the monthly and weekly we have our overall downside target for AUD USD, which is a good structure level creation of the pattern that we want to see on the monthly. So everything up to now is lining up. What we can also notice here on the weekly is that the high that we have found on the monthly is exactly the same high that the market obviously has rejected here, as we had already seen on the monthly. We just see it a little bit better here on the weekly. We go down on the daily time frame. Now on the daily time frame, what we can see on the daily, we can see that this is the movement that the market did. The market made an impulse to the upside, went back down, so created a retracement, tried already to create a higher high, However, it failed and broke back down, creating an M formation. After an M formation, you want to see the market go and retest the neckline, and then you want to see the neckline, aka the previous support, not on resistance, get rejected. And in fact, this is exactly what the market did. Up, down, tried to go higher, however it failed, broke back down, creating the M formation, and now the market is retesting the previous support on resistance, aka the neckline of the M formation, which is acting as resistance. Now, if on the daily time frame you are to find the actual daily target, where is the target from a daily perspective? The target is exactly here. Why? Because before starting this impulse to the upside, where the market stopped exactly here, finding this resistance. So this is the previous resistance that will be turned support at this level. And if the market will go back down and test this support, is definitely a level that the market should hold. Considering it also on the monthly, this is inside of our downside target. So we have our target zone. We have exactly our target price taken on the daily. So from a technical perspective, we're almost finished. We also know that we have strong resistance here on the daily time frame. So previous support and resistance, the neckline of the M formation, as we have previously seen. And if we want to measure this retracement, as you know, we're supposed to be taking the Fibonacci on the impulse. And what you can quickly notice is that the 0.618, the golden ratio, is lining up perfectly with the previous support to resistance, so the neckline of the M formation, which the market in fact has rejected just now. And what you can also see by going on the line chart is that clearly, I mean, if you have problems at the beginning spotting structure, this is definitely a trick that you can use. Go on the line chart and you will quickly see that this is exactly where the structure is. Okay, if you see the line chart do like this level here is structure, and obviously you will have an M formation. Just a quick trick that you can use to spot structure easily, and in fact that is exactly the level that the market has rejected right now. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now, if we go and see what we have from a COT perspective on AUDUSD, so what hedge funds are currently doing on it. Now, if we go and see what we have from an AUD point of view, which AUD means that you're actually checking AUDUSD, because all currencies on the spot are traded against the USD. So if you check AUD, what you're actually checking is AUDUSD. And what you can see, we were sitting here at minus 54k net positions, and currently we're sitting at minus 36. So definitely they're getting more positive. But what you can also notice is that with the last reports, hedge funds have been adding thousands of long positions. Specifically, with the last report, we can see that they added 3.3k long positions and closed 875 shorts. So at the moment, from an institutional perspective, they still are pretty interested in the longs. But the spike here could have been a great way to liquidate those long positions. That is something that we don't know, but is highly probable considering that the market after that spike melted to the downside. Anyway, one thing is for sure, they haven't started properly shorting unless they're shorting inside of this resistance here. So we have to be extra cautious if we are to be looking for this potential shorting opportunity. But that is always right. That is something that we're always supposed to be doing, always being reactive and not predictive. For example, right now on the 4 hours, the market has support here. Obviously, you can't be looking for a short at support unless you have already sold the strong resistance here and you're now risk free. So at the moment on the 4 hours, the market is definitely not ready for this short position, and we have to be extra cautious. So as usual, I give you the full analysis, teaching you as much as possible. We have our directional bias on it, but that is not enough. We have to still wait on the 4 hours for proper confirmation, specifically because as we have just seen, they are still pretty bullish. Okay, with the last report, they clearly added 3.3k longs and closed 875 shorts. So looking for shorts is riskier. Therefore, we need all the confirmations as possible from a 4-hour perspective. And in fact, we still don't have AUDUSD on watchlist with students because it's too early. Okay, at the moment we don't have it on watchlist yet because it's too early. So what we will be doing, we will be monitoring price action on the 4-hour time frame inside of this area with students, waiting for the market to shift from a bullish market to a bearish market, and only then we will add it on watch list, and we will be waiting for the market to provide to us one of our valid entries. And if the market will actually provide to us one of our valid entries, then at that point we will have good probabilities for the move to the downside and for the market to reach our downside target. But if everything remains as it is right now, the market will just continue to move higher since hedge funds are longing. So we will not be looking for any short positions, only if everything shifts to the downside on the 4 hours. If everything remains as it is right now, this market can easily continue to the upside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you a complete market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, and I also answer every single question that you have every day, including the weekends. So it's a very complete program. I suggest you go and check it out. Link is in the description, or I will see you in the next video.